In today's world of market volatility and uncertainty, your retirement plans need to be front and center. With ever-changing tax laws, healthcare worries, and an unpredictable stock market, don't overlook the vulnerability in your retirement planning. Protecting your family and estate will be difficult with shifting policies in Washington. It's more important than ever to keep an eye on retirement.
Hi, and welcome into Eye on Retirement. I'm Rick Everett, alongside our Market Advisory Group panel. Today we're talking about going through retirement plans after a spouse has passed. When you suddenly find yourself alone, it can help to have a whole team working together for you. That's exactly why we brought a team of professionals here with me today. Our full complement of panelists include Larry Klefkorn, financial advisor and founding partner at Market Advisory Group; Joshua Sikora, our lead CPA from Market Tax Services; our paralegal from Eidelman Law Firm, Jenna Moody; and Trey Vasa, healthcare advisor from Market Medicare Advisors. Welcome in, everyone. Larry, recently you had a meeting with a prospective client. Tell us a little bit about that meeting and how it went.
Well, she scheduled her meeting off of our website, marketadvisorygroup.com. You have the ability to choose what type of meeting you want, and in her case, she chose a 15-minute pre-qualifier meeting over the phone. And so that, you know, I think she was wise to do that. She has some specific needs. So her name's Beth. Beth last year lost her husband, and she's trustee of a trust that he has. And as it turns out, he had some collectibles that are valuable. And so we're talking about some art, and the range of it is already in the millions, and they're, you know, not even all the way through selling it at the auctions and that those type of items sell at. So she realizes that with that trust, she needs to follow the letter of the law, so to speak. She has a responsibility to do that. She recognizes that, and is why she reached out to us. She's also very concerned about not making a mistake that has to do with taxes and really regretting something that she cannot undo. And so for those reasons, she has seen us and seen how we all work together here, and we have all the disciplines under the same roof. So it didn't take long into the meeting or into the phone call to realize that this would be worthy for her and for us to properly help her to go ahead and schedule an in-office meeting, and we'll have all the right people there.
So you mentioned there's an estate auction, and that alone touches on several different aspects. Let's focus on taxes first. Joshua Sikora, lead CPA with Market Tax Services. What's your first thought when you hear about Beth's situation?
Yeah, my first thought as Beth started kind of laying out everything is art can be very complicated. Is it self-created art, which gets one set of tax treatment? Is it art that's kind of an investment, a collectible, which gets a different tax treatment? Finding out that it was a collectible and it was an investment definitely made the situation a little more clear. But now it's going to be important that we work with Eidelman Law Firm going forward to understand how the trust was set up, what the rules of the road there, so that we can help her navigate through these different sales transactions and how the art was valued as the trust was holding it, and then dealing with the tax consequences through that liquidation, and then the eventual distribution of all the proceeds going out to the beneficiaries of the trust. That's what makes trust a little bit complicated, is that there's some elections. You got to intentionally do some things to make the taxes flow as the trust is intended to make it happen. If you make a misstep, it can get pretty expensive pretty quickly, which I think is why she was reaching out to us and giving us a call.
Thank you, Joshua. Like Larry said earlier, a trust is involved. There's an estate auction. It's a perfect opportunity for estate planning with an estate planning attorney. We've got Jenna Moody here from Eidelman Law Firm. And Jenna, what are some of the liabilities that Beth is facing from a legal standpoint?
Well, it's really important that the attorney take a look at the trust and start looking through all of the terms of the trust. Beth got lucky in the fact that her husband did set that up and put the assets in the trust, had the forethought to do that rather than us sitting here having a conversation about the court having to approve all of these sales through a probate situation. So we're not having that conversation today, which is nice. But it's definitely one of the things that Gerald's going to have to look at and see how are the terms set up where once all of these auctions go through, once all of the assets are sold, because you can't just put these assets in a garage sale and just say, oh, good luck, everybody. That's not going to work, So it's going to take time for all of these assets to be sold. Once the assets are sold, they're going to be put in the trust. They're held and protected in the trust for however long it's going to take. And only when everything is done can it be distributed. And per the terms, it's going to be really important that those distributions happen in a very, very specific way. So that's what we're going to be doing for her.
Thank you, Jenna. Trey Bossa, Market Medicare Advisors. At least Beth doesn't have to worry about this estate auction affecting her Medicare, right?
Not the full story. There's a lot more to consider, and it's going to dabble in everybody's sector a little bit. But considering the sale of XYZ asset or even the year that Beth sells things can affect her Medicare 2 years down the road. Now she's going from a two-person household, so married filed jointly, to a single household, and in 2 years, she's going to have whatever she's doing this year at the married filed jointly status affect her individual Medicare, even though her husband had been long gone 2 years, and all of a sudden, she has to take into consideration not what is happening now, not what is happening with everything between her taxes, the trust, and her personal assets, and all of these things. She has to start planning for 2 years and beyond, even though everything is affecting her right now.
When it comes to retirement planning, you don't want to let these issues boil over. So many problems can be avoided by asking the questions now, and sometimes all it takes is a 15-minute phone call. We have a whole new process to help retirees get answers before life's plans unexpectedly change. We call it our MAG report. That's Market Advisory Group's retirement evaluation process, other risks, and taxes. The approach is designed to stress test your retirement plan to discover any weaknesses now before they could cost you money down the road. To set up that 15-minute phone call with Market Advisory Group, just dial 833-MAG-REPORT. That's 833-MAG-REPORT. Or you can visit our website at ionretirement.com. There you can also check out past episodes. Stay tuned. In the next segment of Ion Retirement, we talk about the average rate of returns, and that comes your way right after this.
Out on the water, there is a moment. Perfect synchronization. The team working together in harmony to reach their goal. Now, imagine finding a team of financial professionals to help run your course down the river of retirement. Market Advisory Group is that team. Financial advisors, tax professionals, estate planning attorneys, and Medicare advisors. All in the same boat. If you don't have a team like this in one place, it can become a hassle to relay information between them. When you come to Market Advisory Group, we bring everyone together for you. To get you answers in real time. To help make sure you don't miss something that puts your unique plan off course. you shouldn't be the one doing all the work to keep your retirement on pace. You should have a team in the boat with you. Your voice telling them where you're at, where you'd like to end up, and how you want to get there. And at that point, everyone falls into sync, all pulling in the same direction, toward the same purpose. Your retirement's financial security. We are Market Advisory Group, proud sponsor of Shocker Rowing.
Hi, and welcome back into Eye on Retirement. Larry, you told me earlier that Beth had asked what seems like a very simple question: what's Market Advisory Group's average rate of return? But it isn't really that simple, is it?
Yeah, it's not. But you know, when people start visiting and talking, it may be at work with coworkers, it may be with relatives around Thanksgiving or whatever, you know, and these subjects oftentimes come up. And it seems like the conversation invariably goes straight to, what's your average rate of return? They ask each other. And so I like to talk to people about that. So what really matters, the average rate of return or the account balance? So let's say that we are going to just use a nice round number, okay? Because it's easy to do math on. So year one, they deposit or they invest $100,000, and it turns out to be a great year, kind of like 2017, for example. And the market is up 35%. Well, now their account balance is at $135,000. But the next year we have an event similar to 2008, and the market's down 50%. Well, if you look at their account balance, it's painful.
Ouch.
And then year three, the market has a recovery year, kind of like 2009 was. And the market's back up to 35%. Now, right now, you're looking at this and you're seeing 2 years of 35%. Well, that's 70% on the upside, 50% down. So I should be doing pretty good. Wait a minute.
Except for the fact that you're getting 35% on a much lower balance.
Exactly. And so the account balance is not even back to even yet. But yet you would have somebody telling you, maybe even an advisor would be saying to you, look what a great job I've done for you, getting you through this volatility. I created for you an annual rate of return of 6.67%. That's the math. But you look at them and you say, but I'm still down $8,800.
Not even flush.
Right. You know, and at that point you're saying, the investor is saying, who cares about the average rate of return? And my contention is this: the average rate of return tells you something, but the account balance tells you everything. And as a fiduciary, I think it's extremely important that we manage people's money with that in mind, that we're watching what the account balance is. That's the part that's important. And in fact, I find more and more of my clients, when they come in for reviews, the first thing they do is they look over at the column with the total, and they just want to see what that account balance is, because we've talked about this. And then that leads us to another item that is very important in maintaining that account balance and helping that account balance continue to grow. And that is, let's do everything we can to control the downside in the bear market years. Okay? Look at it this way. these are actual numbers now, and this is really real life what happens. We talked about earlier 2008 where the market was down 50%. Okay. A lot of times people's natural thought is, okay, I'm down 50%. Next year we need to have 50% up so I can get back to even. Well, just kind of like you noticed in the PowerPoint a moment ago, if they were to get 50% back, that would only get them halfway back to where they need to go. In other words, if it was $100,000, then it went down to $50,000, 50% gain on that is only half of that, $25,000, only going to get them to $75,000. And so that's why it takes time to recover. And I like to explain to people that things are very different now in retirement. During your working years, you were contributing to your 401k. That helped it to grow, those contributions.
You were ascending the mountain.
That's right. And also they were benefiting from dollar cost averaging as well. But now you're not contributing to it any longer. Now you're supplementing your income from it. So taking a big loss like that can be extremely hazardous to your overall plan. So if we look at this chart, you see that if you were to control your losses to 10%, you only have to make up 11. Or 15%, you would only have to make up 18. Even 20 is more doable, where you'd have to only make up 25%. So my thought is, let's keep it down here. Let's keep it over here where it's more manageable. You spend less time trying to get back to even.
What I hear you describing is a lot of your philosophy as an investment advisor, the approach of managed risk.
That's right. That's right. And I in particular like to layer the risks so that it's not all in just one risk level, so to speak, or
category.
Tactic, or category. But rather you have separate layers and they're doing different things for you.
Don't let a simplified concept like average rate of return go unquestioned. You should always go deeper and ask it to be fully explained. If your financial advisor won't explain, Market Advisory Group is here. To set up a simple 15-minute phone call, call us at 833-MAG-REPORT. That's 833-MAG-REPORT. Or check out our website at ionretirement.com. There you can also watch past episodes or submit a question for us to possibly answer in a future episode. In the next segment of Ion Retirement, we answer one of those viewer questions, and that comes your way right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no obligation, full-blown financial review today.
Hi, and welcome back into Eye on Retirement. In this segment, we answer some viewer questions. And if you'd like to submit a question for us to possibly answer in a future episode, just go to eyeonretirement.com. If we feature your question on air, we'll send you a piece of Eye on Retirement swag. Our first question comes from Patty M. Patty asks, can I change an irrevocable trust? For this, we'll go to Jenna Moody of Eidelman Law Firm.
So the short answer is no. That's the whole point of it being irrevocable.
Well, then I'll ask a follow-up question myself. What reason would you have to put something into an irrevocable trust?
So the entire point of an irrevocable trust is protection. You're either protecting it from an entity, you're doing some kind of spend down for Medicaid or something like that. Or maybe you've got an irrevocable trust because you're trying to protect it for future generations, or you've got a spouse, that doesn't want you to remarry. There's all kinds of reasons to put something into an irrevocable trust, but you should never have to do that without the guidance of an attorney, because they are really going to be the ones that are saying, yes, you could put it in there, but where's the reason why or why not? So it's always best to have a conversation with the attorney before you do that. Thank you, Jenna. The next question dovetails in with the previous one, but with a focus on taxes. C. Baxter asks, my parent recently passed away and left me as the trustee of their now irrevocable trust. The trust is earning income on investments. How will that work at tax time? Joshua Sikora, Market Tax Services, take it away.
Yeah, that's a question we hear quite often. People will put assets into revocable trusts while they're still alive, so that a lot of times they do that so the assets will pass outside of probate proceedings. But now, usually one of the children or someone they trust is now the trustee of the trust, and a lot of times they just don't know what to do. And so it's important to reach out for some guidance on things like this. So this way you make sure that you don't make a misstep. When this person comes in and needs to start talking about the trust and how it's going to work at tax time, it's important we have this conversation really before we get to tax time, because there's some things that need to happen to make sure that you're getting the best tax treatment possible. The way the tax code is set up is that they don't want income pooling up inside these trusts. So if a trust has taxable income at tax time, it gets taxed at a much higher rate than an individual might. So then it's important we talk about how do you get that income out of the trust? And usually that happens through distributions. But it's important that you have those distributions happen in a timely fashion. Make sure that you've got identify where these funds are coming from, make sure who they need to go to, make sure that these distributions are following the rules that are set up inside the trust. That's the great thing about working with the Eidelman Law Firm, is that they're there to help us understand what's supposed to work and what's supposed to happen inside the trust, so that we can help this person make sure that they're following all the rules of the road that they may not even be able to see as they get into this. So then if we can get everything distributed out appropriately, then the individuals pay tax at a much lower rate than what the trust will have to. But it's important to have these pieces planned out and ready to go as we get into tax time.
Larry Clefcorn, founding partner and investment advisor at Market Advisory Group. In just replaying this episode in my mind as it has just unfolded, it begs the question, how do people do this without an entire team working with them?
Probably incomplete, and it's fraught with possible errors. And it's tough for people to have to take the language that they hear from their financial advisor, give that to their attorney in the right way, and for the attorney to receive it as meant. The same thing about going to their accountant, who the attorney doesn't know, and the accountant doesn't know the attorney or the financial advisor, other than cross paths in some particular time. It's dangerous. I think it's dangerous, and it turns the liability up.
Well, and it almost feels as if it's so much more work for the retiree without a team.
No doubt about that.
Because they're the unpaid courier that's having to go and explain to the CPA what the estate planning attorney said, or go to the tax person and say what the financial advisor had spoken. When we are able to bring the client and the whole team around the same table and be able to answer those questions in real time, that's invaluable.
Oh, it is. It truly is. And I can't tell you enough and you see it as well. Just, you can tell by the people's reaction that they're more comfortable.
Absolutely. When you're in the weeds of retirement, it can be isolating. That's why it helps to have someone that's been there to show you the way. It helps even more to have a whole team. Not just a financial advisor, but a CPA, estate planning attorney, and healthcare advisor all in one place. At Market Advisory Group, we are that team. And if you'd like to set up a 15-minute phone call, please reach out right now at 833-MAG-REPORT or do so on our website, ionretirement.com. That's all the time we have for this week. I'm Rick Everett, along with the entire panel, reminding you we're here to keep an eye on retirement.
Unless otherwise indicated, all client and prospect names mentioned on this show have been changed to protect the identities of the individuals discussed. Investment advisory services are offered through Foundations Investment Advisors LLC, an SEC-registered investment advisor. The content provided is intended for informational and educational purposes only. The views, statements, and opinions expressed herein are those of the individual speakers and not necessarily those of Foundations and its affiliates. The information contained herein does not constitute an offer to sell any securities or represent an express or implied opinion or endorsement of any specific investment opportunity, offering, or issuer. Any discussion of performance or returns are not indicative of future results. Each individual investor situation is different, and any ideas provided may not be appropriate for your particular circumstances. Foundations only transacts business in the states where it is registered or excluded or exempt from registration requirements. Registration as an investment advisor is not an endorsement of the firm by security regulators and does not mean the advisor has achieved a specific level of skill or ability. No legal or tax advice is provided. Always consult with a tax professional. Legal services are offered by Edelman Law Firm. Tax services offered by Market Tax Services. Market Advisory Group does not provide legal or tax advice. Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not in any way refer to investment advisory products. Rates and guarantees provided by insurance products and annuities are subject to the financial strength of the issuing insurance company, not guaranteed by any bank or the FDIC. The guest commentators featured in this show are not investment advisor representatives of Foundations and do not provide advisory services. Market Advisory Group does have several investment advisor representatives that can provide such services. This is not endorsed or affiliated with any U.S. government agency, the Social Security Administration, or associated with any federal Medicare program. We do not offer every plan available in your area. Any information we provide is limited to those plans we do offer in your area. Please contact Medicare.gov or 1-800-MEDICARE to get information on all of your options. A Roth conversion may not be suitable for your situation. The primary goal in converting retirement assets into a Roth IRA is to reduce the future tax liability on the distributions you take in retirement or on the distributions of your beneficiaries. The information provided is to help you determine whether or not a Roth IRA conversion may be appropriate for your particular circumstances. Please review your retirement savings, tax, and legacy planning strategies with your legal/tax advisor to be sure a Roth IRA conversion fits into your planning strategies. All rights reserved.